co-chief business officer of Nippon, and also Mr. Shailesh Raj Ban, who has managed Nippon Equity Fund for over 15 years. And this is so I would like to invite you all of you guys for this webinar. And we are having a very interesting session today. So we are going to talk about sunrise sectors. Given what has happened in last 3-4 months, given the COVID situation and now a new situation which has come up with India-China ties, I think every one of us are very interested in knowing which sectors are going to shine in this situation. Where do you want to put your money in, so that you can see the wealth and returns in next 5 years or next 10 years. Yes, so Mr. Saugata and Mr. Shailesh will help us answer all these questions that are in our minds. So let's join. All of us join in welcoming them to the session, and let's start this session. So first, I would like to introduce Mr. Saugata sir. Saugata Chatterjee. He's a co-chief business officer in Nippon India. He successfully built leadership and distribution team in Nippon. He's come a long way. He's been his strategic processes and execution has helped Nippon both the equity side, and I think he was also associated with Reliance Group and the general insurance, and he's built this over many years. Mr. Saugata sir, great to welcome you. It's been a honor to have you on this session, and I think we are going to have a good, interesting discussion going forward.
Thank you very much, Avinash. Thank you very much.
Yeah. So, folks, let's start the session. I think I would first start with Mr. Saugata sir. I would like to first ask Mr. Saugata sir a couple of top of the mind questions based on his experience and based on his experience in the industry and the way he's managed. So, Mr. Saugata sir, I want to understand this. Currently the mutual fund industry has been serving millions of investors. Over the last few years, we have seen influx of young investors, especially with a lot of technology changes that have come in distribution side. So we have seen different age bands that have joined in investing in the investing side. And you have been with Nippon for so many years. You have seen multiple cycles. We have seen 2008 recession. Then we saw 2013 elections in India. We've seen demonetization, and now we are seeing COVID. So I want to understand, what is your experience of managing these investors through these cycles? What is your advice to the investors? What is your advice to especially the young investors who are joining through a lot of tech platforms? So if you could share your experience there, it would be great for our customers.
Yeah, sure. Thanks, Avinash. First of all, let me extend a very warm welcome to all our listeners, all our viewers. I hope all of us are safe in all our locations, and all your family members are doing good. So like Avinash mentioned, this industry, mutual fund industry is, it's a young industry, but it is pretty much 25 to 30 years old. And we have seen, many investors come in this journey of last 25 years. And, there has been a great experience when we, talk to investors, when we interact with them, how investors have stayed through cycles and reacted in various parts of their journey of investments. These learnings, we keep learning. Every event makes us learn, and we go back to our investors and keep sharing with them our experiences so that they can keep staying invested for long periods of time. So what I'm going to share with all of us today, and we have seen the entire journey wherein every genre of investor has come in our life cycle, right from a young investor who has just started off doing work to an investor who has sort of matured in his career, and then they start investing probably in the mid 30s, 40s, and then an investor who probably comes late in the cycle and has also stayed invested in the funds. So there are various type of investors who do come, but there are some things which are very, very standard, which one needs to keep in mind while investing, which is what I'm going to share with all of us today. What I'll do is now share few slides and few data points to make all of us understand why mutual funds is meant for long term, and how one should ride these circumstances like COVID and many other things which will happen in the future, and keep staying invested and remain focused towards wealth creation. So let me just start, Avinash. I'm just presenting my slides. Is it visible, Avinash?
Yes, it's visible, Shailaj.
Okay,
Sorry.
great.
Yeah.
So I think the theme is savings is essential. I think that's very, very critical for all of us. And great to have ClearTax presenting this and giving us an opportunity to talk to all of you all. Yes. I think something.
Your screen was visible, Saugata.
Yeah, it is just not. It was not moving into the next slide. Just 1 minute. Is it visible now?
Yeah, it's visible. Yeah.
Yeah. So coming to the first point, this is a very common thing. All of us keep doing this daily stuff where we earn something, we spend, and then finally whatever remains, we keep thinking in our mind, how do you do savings out of that? I think the world has changed, and this is our learning over periods of time where the formula is very different. Whatever you earn, minus your savings. Savings, you have to plan for your savings much, much early, and then get into the remaining part towards expenditure. Once you do the opposite, that is expenditure, income minus expenditure, then you have hardly any money remaining with you for savings. So ideally, a successful investor is one who creates this formula of success where whatever you earn minus you allocate funds for savings and investments, and the remaining gets into expenditure. And has been the success story of many, many investors in the long term. And I think when we are planning for our investments and we got to have a goal in mind. The goal setting is very, very critical. It should not be a case wherein I save something and I start allocating money into investments. Unless we have a goal in front of us, this entire concept of investments for the long term becomes very it is not very effective. Goal can be anything for child education, marriage, retirement. I think retirement is a big, big concept in India, which one has to really absorb at early parts of your age, because a lot of things related to healthcare and other stuff is aligned with retirement, and hence one has to start investing and planning much earlier. What does this graph clearly show? That if you are investing for long term, and if you take a 7%, 9%, 12%, 15% bands of returns which you are getting in your investment, the longer you stay, and if you get a higher percentage of returns, the ability for your corpus to multiply is humongous. Say as an example, if one has invested 10,000 rupees per month for 30 years, one accumulates at the rate of 7%, year on year compounding, 1.22 crores of wealth. If the same amount is compounded at say 12%, it becomes 3.5 crores. With the same amount, you don't need to increase your amount, but you can multiply your corpus by almost 3 times. If you have a near-term, goal, the probably the interest rates or the investments can go into a lower interest rate, yielding asset. The longer you have a goal, it can go into a higher yielding asset, and that's how one creates wealth for the long term. Please note, volatility is your friend. What happens generally that when market keeps moving up and down, there are events which keep happening. We start getting anxious as to what's happening to our wealth, what's happening to our savings, what's happening to our investments. Please note, volatility has to be your friend. If volatility is your friend, we ride the cycle very, very successfully. This chart clearly demonstrates, there have been instances in the past where markets have fallen, markets have recovered. We have already seen in the last 3 months, market really corrected by 25-30%, and it has already recovered a fair bit of that journey in the last 2 to 3 months. And there have been instances in the past where the fall has been sharp and the recovery also takes place. But this period of volatility has to be ridden by us, and it's like a roller coaster. When you're in the roller coaster, you don't leave that roller coaster in between thinking that if I'm going down, I now need to exit, because you got to ride with the crowd, and then you go into a high and then enjoy the ride. So that's how the entire behavior has to be of all of us for wealth creation to happen in the long term. And this chart clearly shows that volatility and market dynamics have remained for ages. Either it is in Nifty 50, which is the index, or it is the 10-year GSEC, which is the Government of India borrowing security, or it is gold. There are phases where every asset class will have its own cycle of movement, but one has to ride that and stay invested for long to enjoy the return over long periods of time. And this is a very classic example. What I did mention to you earlier about roller coaster, the greed and fear. Greed and fear is a very, very common thing which an investor goes through. As the market starts moving up, you feel that you are missing the bus and you try to come into that market. And so you try to time, and then you enter a market at a high level. And suddenly when there's a fall, you feel that you have lost all your gains, and again you try to exit. So that greed and fear is a very important part of our investors' behavior. I would urge everyone to please ride through the journey, and let's not, let the market move in its own dynamics. And in the long term, investor will always should create more wealth than the investment return. This is a classic thing where investment return happens, but the investor does not get the returns because he or she would have exited that journey when the fall is happening, or would have entered the journey when the greed is very high and you start getting at a higher level. Practice asset allocation. I think very critical in our life. There are various assets: equity, debt, gold, real estate. You have various aspects of your fixed deposits where you can put your money, but asset allocation is very critical. And I'm sure ClearTax and others and our partners will be able to really handhold you in this journey of asset allocation in the long term. Another important, the entire part of wealth creation happens through a systematic investment plans. I'm sure many of us in the call would have heard about SIPs. I think SIP is one of the seventh wonder of the world, where through SIPs, a lot of our investors in the last 25 years of our journey, we have seen have created, they have created their goal. They have made their goal of creating a good house, great house, getting their children married, sending their children abroad. But SIPs have been the way or towards creating wealth. Please do not discontinue SIPs. The SIPs are a way to accumulate units in the downturn, the benefit which comes in the upturn when the market reverses. And that's how you keep accumulating wealth over long periods of time. And finally, I would like to, end this particular talk with this slide where, where Warren Buffett actually has mentioned that my wealth has come from a combination of living in US and some lucky genes and compounding interest. I think the story of mutual funds, story of investment is all about power of compounding. The more you stay invested for long periods of time, that please remember the first graph which I did show, 7, 11, 12, 15, you keep compounding and you keep growing your wealth. I think these are the formulas, simple formulas of success, and one can really remain successful, remain a successful investor for long periods of time and create wealth. That's from my side, Avinash.
Thanks, Agata. It was a very interesting conversation with you. Very interesting things to know. This last slide which you showed about Buffett earning 90% of his wealth only after 50 years gives a lot of confidence for a lot of young investors that the road is long, and I think if they keep staying invested, then the wealth will come and the prosperity will come.
Sure.
Thanks a lot, Saugata, for this wonderful session. So, friends, I'll now move on to Mr. Shailesh sir. I think Shailesh sir has been a veteran in this industry. He's managed Nippon equity funds for over 15 years. I think, if I'm not wrong, he was managing the Nippon multi-cap fund, if I'm not wrong. And I've also been a part of that during my investing journey. So I know how the fund is managed and other things. So yeah, so really a great veteran. He's also, apart from the equity fund, I think he's also managed the pharma sector. He's managing funds in pharma sector. So it would be great to hear directly from Shailesh sir on how the investor should go through the journey during post-COVID, and what are the sectors they can look at, or what are the rising sectors they can look at given all the macro situations that are happening right now. So Shailesh sir, really welcome you for this session with you. We are really thankful for having you with us. Really a pleasure to meet you personally. Yeah. So, Mr. Shailesh, I would like to start off with a generic question. I think one thing that most of our investors want to know is how would the markets behave post-COVID? And I think since we have seen a lot of investors influx in the last few years, not many investors might have faced the cycles that you have seen over your tenure. So one is I think our investors would like to know what is the prospect of the markets post COVID? How is it turning out? What is your experience, and what is your forethought?
Thank you, Avinash. Thank you for having me. I will take you through some of my experiences over the years, because these cycles, every time they appear new, a challenge every time appears daunting, and you cannot overcome it. Yeah. You feel you cannot overcome it, but I think the possibilities are too many in front of us. So I'll take you through all aspects of this pre-COVID and post-COVID developments. Let us take the pre-COVID period. Last 5 years, we have seen reforms, and reforms. I mean, whether you talk about a GST, whether you talk about IBC, whether you talk about RERA, whether you talk about multiple sets of reforms which have come about. And now you've got the APMC Act being abolished, and agriculture products being virtually now available for the private sector to participate in. So I think we've seen a plethora of reforms the last 4 or 5 years. These reforms also coincided with a very weak or challenging banking system we have had in that period. and hence our overall growth was muted. And we saw earnings in India just grow at about 5% for a 5-year period. If you had asked me 5 years back in 2015 that India's earnings will grow only 5% when you have a complete majority at the center, I would have said no. So hence my predicting a particular event is not important, but what is important is this 5 years have set a platform for very strong growth in years to come. In fact, each of these things, GST was under works for 10 years. Yes, it has created some problems initially. It's created same problems in every country where it was implemented. Second, IBC, I think this is possibly a bigger reform than GST in my opinion, because today underperforming assets can be transferred, ownerships can be shifted without problems and legal issues. That's a very, very big reform, right? Yes. And likewise, the Real Estate Act, as you know, real estate is the largest sector in this country. Yes. And was never seen as a sector and never had complete legitimacy because the conditions and the guidelines around it were not easy. But RERA gives enough power now to the consumer. And I think that is a big change in my opinion. So all these reforms which happened had led to a period of slower than usual growth in India. And I think we were just trying to come back to normalcy, take off with lower interest rates and all. We were stabilizing, and then you had this COVID problem coming through. Yeah. I say the COVID issues are primarily of two kinds. First, it comes from a cash flow problem because you've not had business in April and May because it was a lockdown which was initiated. It was an internal decision taken, right, to lock it down. And our economic activity was lower in this period. You've had cash flow problems in some businesses. Yes. The second set of issue has been a confidence problem coming from the low cash flows itself, and also the fact that when will this get over? I think these are two primary questions which we are living with today. Yes. I think it's very simple. As we opened up in June, we have seen economic activity back to 50% plus. It was possibly the sharpest comeback which a lot of people and a lot of companies whom we have been interacting in the difficult times of March, April, May, never believed that in a month you could see this kind of a recovery. So I think there has been great improvement in just one reasonable month of June. We think that we are still muddling around with challenges on the health side. Cases are still rising in India. So maybe you'll get better clarity as things improve in a couple of months. By the time we are in the festive season, we should be 70-80% of economic activity back in the system, which I think is very decent from a very sharp collapse in April and May. Yeah. If that happens, I think we are back to reasonable normalcy. During this period, the issues of during this period, whatever companies have faced, there are 3-4 clear directional changes which are visible. Like you said, how one could look at markets. One, those who have balance sheets which are strong, yes, I think will clearly be winners of the next 3-4 years because they will gain material market shares. People who have been impacted by revenues and profits in this period are struggling, who have leverage, have some problems now, and hence market share shifts will be material. Consolidation is visible in every single sector in the country today. It's not just telecom, it's there in every single sector. Yeah. And that I think will be an important point to note. And the third point is whatever business which will come post this COVID, which actually started to come about now, will only go to a select few or lesser number of companies, which will enjoy over a period of time much better profitability than what you're seeing today. So I think many of these shifts are already underway as we speak. And I think these are all throwing up very good opportunities for all of us.
Yeah. Yeah, thanks, Shailesh. So yeah, I agree with you. I think a few of the things that you said, especially the reforms in GST, reforms in RERA, and reforms in especially agriculture, which we have just seen during the COVID, would be very transformative for India going forward. So a lead-up question for this, I wanted to know from you, Shailesh, is so while we have, I think, some really good policies that have come out through in the last 3-4 years, and a major big sectors are going to see transformation in this. During the COVID, we have also seen that there is this anti-China sentiment, and there's a lot of talks about shifting of sourcing for a lot of companies back to India. And so wanted to understand from you, how is India placed in terms of especially infrastructure, especially in terms of resources and policies? Are we in a position where we can take advantage of this situation? Can we deliver it to the world? Do you see a China-like growth going forward? Where are we, and what is your opinion there?
If you look back, 10 years or 15 years back, India wanted or had an aspiration to be a manufacturing hub. But at that point of time, China changed gears and, completely went ahead of all of us by a huge margin. During this 10-year period, wages and costs in China have also risen materially.
Yeah.
So it's no longer as cheap as it used to be before. In fact, if you read the last 5 years, articles on wage increases in China have been very, very high. And that is how they have created a consumer market, which is very large in China itself, right?
Yeah.
And hence the opportunity for somebody else to fill up the place is there. We have seen some countries like Vietnam and all competing for that space. And I think there is a possibility of that, of shifting of manufacturing to happen. 2-3 interesting developments have happened even before this COVID and China falling a little out of favor in the global business environment. 2-3 things were happening. 2 or 3 years back, if you remember, there was a big pollution problem in China, which created supply disruption in the chemical chain and the pharmaceutical chain for a period of 6 to 9 months. And that came as a shock for the global consumers because the dependency on China for chemicals was very, very huge. From then on, we have seen this talk on India as the second opportunity or next opportunity which is there. And if we are able to capture this, it could well be a opportunity which, I would say then manufacturing will be the sector for the next 10 years. Why this is important is in any manufacturing scale which we do today, we do about 10% or 7% of China. I think we are at that scale in every aspect of it. And we don't have a large global export base at the moment in many places. And hence our scale and opportunity is very large, even if we move the needle by maybe a 5 or 10 or 20 percentage points. In fact, we could just double our business in manufacturing if we are able to provide the right environment and policy. The second point is to note that today, as we speak, India has no problems of availability of power. India has manpower, which is reasonably well-trained, far better trained. India in some industries has global scale, like in auto and all, we would be the 4th or 5th largest manufacturer by volume in the world. In pharmaceuticals, we would be among the top 3 in terms of manufacturers of volume in the world. So you have built certain sectors and capabilities where, you have created a platform, a supply chain, a backend, and ability to demonstrate that you can deliver large volumes the global market needs. Our case is that China will continue to be dominant in manufacturing. But even if we substitute some of Chinese manufacturing by localization, which is now the theme across when we speak to a large number of companies, you could see domestic growth coming back much higher. It could well be an important driver. Annually today, we import about $70 to $75 billion from China. Right. And I know in every area we cannot be the best manufacturer, but I think even if we shift a third of it over a 3-year period, it could well add as large as a whole auto sector as an industry, which is a $25-30 billion industry in a matter of 3, 4, 5 years. So are we approaching it and are we doing it the right way? I think many things are now coming into place. The Make in India initiative, which started about 3, 4, 5 years back, is now getting some framework. The manufacturing tax of just 15% on any new capacity to be set up till 2023, I think is a game changer. Which unfortunately must have been impacted due to a slowdown and some deferment. But I think was a fundamental disadvantage India was living at, that we were at much higher tax rates as compared to global manufacturing places. Now you have got lower interest rates is the second element which is there in your favor. And directionally now supply chains are there, and now customers want to buy from India. So they are looking for they're looking for an alternative to India. And if we are able to demonstrate, even if multinational companies come here and set up manufacturing export, I think it creates a wonderful opportunity for us.
Yeah, I completely agree with you. I think we have seen tremendous support from the government also on especially phone makers and electronics industries to come and set up here. Even in pharmaceuticals, I think we have established some, even generic drugs, we have established significant market share in the world. So yeah, I completely agree with you on, I think the opportunity is just for us to grab in this situation. So Mr. Shailesh, the other thing I think I want to ask you is, so most of the investors, what we have seen in the last 3-4 months is that there's a lot of liquidity infusion, both from global banks and even from India. And what we have seen in the near term is that as the markets had dropped, almost all the markets in across all the indexes have seen a V-shaped recovery, even though the economy hasn't seen that yet. So I wanted to ask your opinion if this is sustainable. In fact, even in India, we saw a lot of liquidity coming in from global investors when the V-shaped recovery happened. So how sustainable is this? How long will it last? I still see a lot of balance available on the Fed balance sheets. Maybe there's another round of liquidity that might come in. So what is your opinion, or what should we look forward to? Is this a sustainable model? Is this a good time even for investors to come in, is it, people come in and then we see liquidity lose? So what is your opinion here?
See, there clearly is a lot of talk and a lot of action in the international various other countries where people have put in so much of money. Yeah. In fact, it's like there are people are being paid to retain employees, companies are being paid to retain employees, and all that. I think this is a shorter term phenomenon. You can't grow out of a problem by pure liquidity. And India, in a way, has to a large extent managed it by not blowing its resources away in the first phase of it. Yeah. And we think what we have done is made sure that the bottom 50, 60, 70 crore people in terms of income levels are taken care of by providing minimum requirement for their sustenance, which is very critical, especially in the cycle. And thankfully, we have got a decently good agri environment for the last 12, 18 months, and which is supporting cash flows and supporting a large section of a population today. So liquidity is a reality today, which is there, and we don't know when, till, and how long it lasts. Our approach is Indian equity markets are not necessarily purely liquidity run, like how international markets have been. Okay. I think that's why our recovery has been a little slower than what US markets and others have recovered. And it is because of the fact that we were in our own slowdown over the last 3-4 years that I talked to you about. What we have to look at is beyond this liquidity, what is the opportunity for all of us? See, markets can give you 10% lower, 7% higher. In that kind of volatility is a norm. But I think what is the opportunity this whole environment presents to us? We think there are many sectors, many industries, many businesses today which are re-engineering, redesigning for this new era. And the opportunity in India, virtually everything in this country is underpenetrated, underinvested, and has opportunity which can run for a 10-15-year period. So I think that is where our focus is, and we think the longer term opportunity is materially larger. In the near term, can you see a 5-7%, 10% correction in markets? That's very normal. If you have some bad news in terms of data flow, in terms of spread of cases, that's all very normal. But directionally, I think after a shave off of 20-30% from the highs, we have a decent opportunity in front of us.
Yes, completely agree with you. I think in India, especially, there's a lot of efficiency to be brought up on, and I think that only creates more opportunity for us to go forward. Mr. Shailesh, what do you think about the key risks that we have going forward, both globally and from India, and what should the investors be aware of while they are taking their decisions?
See, the recent spurt in global liquidity, as I said, nobody knows how long it will last, right? Can create some interim challenges. Yeah. Though we are not fully dependent on those flows to really determine, given the huge growth in domestic money and flows over the last several years. Yeah. I think that does create volatility in the system. As my colleague Saugata talked to you about volatility, he said is a friend. I think it is a friend of a prepared investor. Yeah. So I think if you are a prepared investor effectively, I think these are all actually opportunities available to you. Other risks which are there, in fact, some of these risks have actually reduced materially in the last few months. Oil, for example, is giving us a bonanza of $20 billion this year if it remains here. Wow. And that's as good as 2.5 months of GST collection. So if you lost 1.5 months of GST collections, it can very well easily be made up with the recoveries which the government is having from oil. Yeah. Second is inflation. Our inflationary trends are primarily challenges from oil and oil-associated derivatives which are there, and food. I think both these are very, very well contained. In fact, it was a very good job of keeping inflation low over the last 3, 4, 5 years by this the government and the policies which were there. And I think that will allow us to show a recovery which is far more sustained and far more long lasting.
Yeah.
Other risk is if you are completely unable to manage the healthcare challenge coming out of COVID, which I think we have already learned a lot in terms of protocol. Testing is also scaled up materially, and people are aware. Globally, standards are coming up, and there are a lot of vaccines under works. So I think we will have some good news over the next 12 months there, which will also solve that lack of visibility problem. I think the near-term issue is just managing cash flows and confidence of people as recovery steps in till the festive season, which I think will allow for manage whatever intermittent challenges that keep coming about.
Nice, interesting. So, Mr. Shailesh, in this situation, right, in this COVID situation, I mean, after any recessionary period, you see a lot of sectors who get burnt out. There are few sectors who suddenly start shining. So from your experience in this pandemic situation, what do you think? What would be the new sunrise sectors that you see will come up in the next 5 to 10 years? Where would you put your bets on? What is your opinion? What advice would you give to the investors also?
Thankfully, in India, there are many such opportunities. It's unlike a developed place where, you have achieved a high degree of per capita income and, every single need has been met. Hence, only technology grows there or whatever. In India, virtually, there is an opportunity in every aspect of, in many sectors, given the level of underpenetration. Let us take, say, the pharmaceutical sector in India. The pharmaceutical sector in India is possibly one of the most underappreciated sectors out of India. It sells in over 150 countries in the world. It has its own branded presence in over nearly about 15 to 20 countries with its own brands being sold. Yeah. There's brands selling now in the US market, the most developed market in the world. Yeah. So if you look at pharmaceutical as a sector, India is clearly cost competitive, clearly dominant globally. And this COVID will only allow, or given how we have behaved well in terms of maintaining our supplies, even in the most difficult of times, I think India standing in this sector globally has taken and gone to the next level. Secondly, large companies in India today can invest between 5,000 crores to 6,000 crores annually for a 5-year, 10-year period, which scale was not there in India 10 years back. So that also creates a lot of opportunity to launch new products, address many markets and grow up. Fourth, in India, pre-COVID or post-COVID, health is brought about to be possibly the topmost point in terms of any individuals or any corporates or any on the government's agenda. This shift, I think, is material because this will lead to better compliance, better diagnostics. This will lead to people spending more on healthcare than usual. This will force governments to invest more on healthcare. And this will be a positive tailwind for the whole sector for the next few years. India is known as the youngest nation in the world, right? Having 70 crore people below the age of 30. Yeah. The irony is, over the age of 50, India has 27 crore people, which is larger than the population of US.
US, okay.
It's larger than the population of Brazil, and maybe 50 plus people in India will account for being the 4th largest nation by population in the world. Wow. So I think we have opportunities in every pocket, a younger generation creating a huge consumer opportunity and the older generation who requires services and medical kits from pharmaceutical side. So this is one sector which I think where India is dominant, capable, demonstrated scale, and possibly in its second big phase of growth over the next few years. Likewise, if you go business by business or sector by sector, you'll realize that there is a big wave of companies who are using technology. Now, this is one I wouldn't classify it as a specific sector, but it's a sunrise opportunity because existing large businesses are using technology to a big advantage. Unlike in the US and all, you saw new industries come about around the tech side. In India, you haven't seen so much of it. It's all in the private sectors, in the private equity space today. But I think you will see large corporates in India can demonstratively use this technology to clearly differentiate, improve cost, and create profits virtually, which are purely efficiency driven and can accelerate many such areas. You can see in banking today, a lot of businesses have had that 5-second loan turnaround, and a lot of digital artificial intelligence and technologies being used to support their existing businesses. So one big bet is large corporates who are agile, I think, can actually investing there in technology can be create a very, very big space for the next few years. The third, which I think hasn't happened for the last few years, but I think if ever there is a chance, it is the best time in India to happen, is the manufacturing sector in India. Manufacturing today is minuscule in India from the context of how its economic size is.
Yes.
In fact, you'll be surprised, so many sectors are, so many sub-segments of manufacturing are way, way smaller. In everything, we are 1/10 of China or lesser.
Yeah.
In terms of manufacturing by volume, except pharmaceuticals maybe. And there, I think the possibility for us to scale that up is tremendous. All the positive tailwinds we have talked to you about, which are there, but I think the most important factor is that India itself is now emerging as a large market. So 10 years back, if India had to set up a manufacturing for, say, 5 million air conditioners in India, there was not even a market for 500,000 in India.
Yeah.
So how could they have actually created it, right? So today there is a market for 6-7 million air conditioners in India. The whole back-end compressor and everything can be set up in India, leading to a manufacturing boom. So likewise, in many sectors, the domestic market itself is becoming meaningful, which will allow for creating a globally competitive scale of manufacturing infrastructure in India, and also use that to export out of India. So I think manufacturing is very, very well placed in the next few years, especially because it is coming out of 3, 4, 5 or 7, 8 very difficult years. And whatever companies have survived, I think this is one sector which has seen maximum consolidation. And those who have survived and come out of it could well have a decade of compounding in front of them. The fourth space is, a little bit of, people will not call it a sunrise sector from a point of view of where they stand, but from a valuation point of view, these businesses today are virtually at bankruptcy valuations. Most public sector businesses today are valued at significantly below their book, despite having 20-year longevity and all that. So these could well be opportunities, not from a sector point of view, but from a valuation point of view for investors. As the government will have to overhaul some of these and raise a lot of capital, because to fill up the gap of COVID, as well as to meet aspirations of creating large manufacturing infrastructure and giving a thrust to manufacturing in India, you need a lot more of capital, which the government will have to recycle capital from their assets, which are nothing but public sector stocks and public sector investments. So these 4 and 5 areas are critical. The fifth is automobiles. Now, it may appear to be a sector which is done and dusted, and it's a sector. Just put the size of this sector in the context. India may be selling about 3 to 3.5 million cars every year. Right, in a good year we would have done that. And cumulatively we would have maybe about 3 crore cars on road in the last 20-25 years. Right. China has been selling 3 crore cars each year for the last 7 years. Right? And I'm just saying, at each level, if you see, there is a tremendous opportunity in auto also, in these areas for passenger cars and all that. I think it is a very good opportunity in front, especially when you are kind of seen a slowdown in the last 2-3 years, which allows people to become more efficient and all that. And then, you would have growth coming over the next few years to really. So in many sectors like this, if I go sector by sector, there's an opportunity presented to all of us. Consumer creates multiple opportunities, but within consumer, or I would say within the sub-pharma space of consumer, you've got both online and offline retail as an opportunity. Today, they are not seen as, offline is not seen as an opportunity because what's happening because of COVID. But I think as things normalize, that could well be there. The sixth point I would want to leave viewers with is that there are a few sectors which have been disproportionately damaged by COVID, and today are not in anybody's buy list or anybody's favored list. These include multiplexes, these include hotels, these includes businesses like malls, retail outlets, and lot of such tourism, lot of such businesses associated with it. I think this is one pocket which today may not appear so lucrative, but most of these have collapsed in valuations and are available much below replacement cost. And these are assets which will not create or not have any competition for the next 10 years, because no new capacity, no bank lending will go into these areas. So I think this is one fifth or sixth opportunity and possibility which India has. Other headline-based, opportunities are like, diagnostics. This will just compound double-digit volumes for a long period of time because of significant underpenetration. Likewise, many such sectors, subsectors exist within each of these areas which present this opportunity.
So Shailesh, very interesting thought process. So a lot of our viewers are asking questions, and I would like to take some questions directly from our viewers. So on the sectors, I think Poonam Srivastava is asking a question. So she asks, sir, a lot of hospitals are empty because of COVID and business is down. Is this a loss for pharma and healthcare? And is it a good time to invest in these sectors?
Yeah. See, it's a very interesting question, because normally people expect hospitals to do well in this kind of an environment. But yes, there have been challenges and the sector is going through difficult times.
Yeah.
Please understand that COVID is a problem which we don't know when it will end, but I think it seems to be a problem which will be there for a few months, at least maybe in the next 6-12 months, as we understand. I think a lot of hospitals, a lot of businesses, a lot of these companies are now learning how to handle this and come out of it. In fact, hospitals have suffered also by people postponing a lot of their elective surgeries, which needed to be done in this period. And I think all this is nothing but deferred demand. You cannot escape this challenge which is there, and hence you will have a big comeback. In fact, internationally, we have seen a lot of hospitals already seeing a comeback of this deferred demand, whether it is surgeries which are related to heart or various other areas coming back. So I think demand in hospitals will come back. I think they are having a difficult time today over the last 3 months or so. But I think directionally, this kind of infrastructure is not replicable, not easily creatable. And I think with emphasis on medical insurance and all being very significant and high now, given what's happening, I think this sector could well be at its turning point. So at the moment, it is a damaged sub-segment of the healthcare sector. But I think with interesting valuations, this is a sector with a lot of opportunity.
Yeah, interesting. I think the point about being a deferred demand, and it's not like it's a loss of demand. That's a very interesting perspective. So, Mr. Shailesh, there is also a couple of other questions on sectoral questions. There's Shubham Mittal, and Shubham Mittal wants to know that given this COVID situation, there's a lot of no-touch economy is being brought in this during this period. And so, how do you read technology sectors, and is there an opportunity for technology sectors just in India? And should he put his money there?
See, interestingly, most of these tech solutions which are there to provide, what are required in the current environment. In fact, it's a matter of fact that online and various other shifts in technology have got a huge positive support from the development of COVID. It's an outcome of this crisis which we're living in. And the need to invest in technology is paramount. So there is no doubt about it. Second is, will companies providing solutions in these areas benefit? Yes, I think the way consumers are latching onto it, and the way there is a need for a solution. See, everybody wants to do business. So whatever it takes for the value addition to the end customer to execute it today. See, today you have to get a consumer to buy your product. So whatever it takes, whether it is in each of the areas you mentioned about, I think all these technologies will be the need of the hour. And companies providing solutions for this, if they have a reasonable business model, they are not just burning cash, but they have some reasonable business model around how they will grow and form a, like, for example, how the software as a service business model has evolved globally to be a very large and successful model. And I think these are fantastic opportunities in front of us, and COVID has supported them, or they are a significant beneficiary of this unfortunate event.
Thanks a lot, Shailesh. I'll take a few more customer questions, because we're seeing a lot of them coming in right now. So there is one more person called Devi S. She wants to know, is it a good time? What is your opinion about mid caps and small caps, especially in this scenario? And is it a good time to take any bets in this segment?
See, generally, when you look at it, the mid cap and small cap weakness had started 2.5 years back. In fact, since 2017 end or 2018 early, so we have seen a 2.5 year challenge environment in mid and small cap. And valuations like across the market has corrected 30%. Even mid and small cap have fallen even more. So from a valuation point of view, this sector is the segment of the market is very interesting. Only just one point I want to emphasize on is just don't go only by market capitalizations. I would call them, there are rather than mid and small cap or large cap businesses, there are good businesses and inferior businesses in both these categories. So our greater emphasis towards choosing better businesses in each of the segments. But on a pure multiple basis, have mid and small cap corrected enough? Yes, they have corrected significantly, and are attractive for investors from at least a 3-year horizon.
Thanks a lot, Shailesh. So thanks a lot for taking the customer questions. There were quite a few people who started asking the questions. So I think just to wrap up the discussion, Shailesh, I would like to ask one final question from you. In this scenario right now, in this COVID scenario, there's still a lot of uncertainty that is acting. There's a lot of factors that has to be considered. We still have not discovered a vaccine, so we don't know if we are going to have a Spanish flu-like situation where there's going to be a second wave, and we still don't know how far we are away from normalization. What is your suggestion for investors in terms of investment opportunity, and what should they be doing?
See, when you have certainty of everything, the prices will be high. And you actually get to buy businesses cheaper when there is this kind of uncertainty around us. Two things was, this is nowhere near what happened so many years back. Everybody refers this as to, I think there are now enough protocols, enough solutions, and there is enough preparedness and knowledge in the system to be able to handle this kind of a challenge. Only point I just want to mention is, every time when you have a big problem in front of us and markets correct because of that, right? It is always perceived that this problem will last longer. And there is, I remember in 2007 and 8, when this whole crisis happened, people, and then you had a GFC, and then you had a big fall in stock prices. People said that countries will not come back, countries will disappear. It was not about companies then, countries were having challenges then. And people said US is gone forever. Actually, US had the biggest bull market in the last 10 years, when dollar returns of their indices was delivering 15-18%. So our idea is not to predict something with a defined time frame of how it will work, but being rationally and reasonably being right and having a 3-5 year horizon could give you, could give investors possibly, they may look back 3 years later and say, "Was what an extraordinary opportunity you have missed about thinking about the problems which were there at that moment." So I think every problem appears bigger than what it is when you're living through it. It is like when somebody meets with an accident, he's very careful for the first 3 months when he drives. I think this is what is happening to markets. Second important piece is, please don't forget asset allocation. So if you're putting money into equities, you definitely know that they carry volatility, they have their challenges. You put only as much as amount of allocation which you think you can handle from a 3-year, 5-year, 7-year period. The minute you do that, automatically half your issues get addressed. And you are beneficiary of whenever the markets revive and normalize. But if you're not participating at all, you remain as spectators in the marketplace. You're not a player, so you never have an opportunity to win a man of the match. So I think you have to use asset allocation to participate and allocate properly in these times. In fact, these kind of times are actually like a sale in the marketplace, I think. So if you're sensibly allocated and reasonably risk managed, I think this is a great opportunity for investors from the next 5-year point of view.
So thanks a lot, Shailesh. So it was a great opportunity interacting with you. I think really profound thoughts, especially on pharma sector, and I think definitely manufacturing. We have already seen how our automobile has shown us, if we create a manufacturing ecosystem, then we can be really good at it. And I completely agree with your thoughts. And I also really want to thank you on major aspects of the industry strategy that you have spoken about post-COVID and volatility, and how do we take forward from here. So it's been a great interacting session with you and both Saugata. So Saugata sir, also thanks for giving a brief intro about how people should carry forward in terms of asset allocation, in terms of volatility, and holding on to long term. I think that was one slide that I'll take away from. So thanks Shailesh, and thanks Saugata. It's been a great interactive session with you, and hopefully we'll call you back again sometime, given our interest from our investors. So, but it's been a very interesting session.
Thank you very much. Thank you for your time as well.
Thanks a lot. Yeah.